And welcome to Markets today. I'm Sonia Shenoy and with me is Reema Tendulkar. It was a good day of trade for the markets. So the Sensex and the Nifty went home with handsome gains of around 0.7%, but couldn't say the same for the Midcap index, Reema. That one actually underperformed the market today.
Yes, indeed. But I think let's talk more about the large cap outperformance. We had a bit of a gap up opening and we managed to hold on to most of those gains. And the session was largely stable. We'll discuss all that and more. We've got a lot of opinion as well lined up on the show. These are all the top stories. Markets closed on a firm note. The Nifty is above that 8,400 on a closing basis. A gain of 0.7%. The Sensex rallies nearly 200 points, led by strength in IT and financial stocks. Midcaps come off 0.7% to end in the red.
And IT stocks like Tech Mahindra and HCL Tech rally over 2%, while financials like HDFC and HDFC Bank outperform. Bajaj Auto, though, cracked ahead of its results tomorrow. Bharat Forge missed the sky-high expectations.
JP Associates and Ultratech Cement are in focus. CNBC TV18 learns that Ultratech has its eyes on JP Group's plant in Bhilai, Chhattisgarh. Ultratech is looking to buy out the plant at an enterprise value of 2,100 to 2,200 crores. That is a CNBC TV18 exclusive.
All right, those are all the top headlines, and here are the experts that we have lined up for you guys on the show. Vikas Khimani of Edelweiss Securities will be giving us his take on the markets. Gautam Trivedi will tell us what sectors to bet on and what sectors to avoid. Not just that, he'll also talk about the road trip that Religare had in Gujarat and Maharashtra and the key takeaways from that. Also, Shane Oliver of AMP Capital Investors will join in with his outlook for global markets. All that coming up in the next half an hour. But first, let's turn our attention to the Lal Street.
Yes, indeed. The bulls continue to march ahead in the Lal Street after yesterday's blip. Blue chips hogged the limelight today with banks and IT stocks leading from the front. The Nifty managed to reconquer 8,400 mark, gaining nearly 60 points in trade today. Sensex rallied nearly 200 points. That index is now within kissing distance of that 28,000 mark. The Midcaps underperformed today with the index ending with marginal losses. Anuj Singhal is here with all the market action. Anuj, overall, good going for the bulls?
Good going for the bulls today. In fact, it was a strong day. There was a bit of intraday blip, but really that was bought into. What was interesting today was that it was a large cap driven day. I won't still call it a big mid-cap underperformance day, more of the large caps catching up to the recent mid-cap outperformance. Today, of course, the two big sectors led the market, banks and IT. When banks and IT both move, bulls feel good about the market. So let's talk about some of the stocks that really led the way. IT stocks clearly right on top again, and IT index in fact has been doing remarkably well for last 3 or 4 days. Tech Mahindra, HCL Tech, TCS, all these stocks were in the green and by quite some margin. So clearly good gains for IT stocks. Apart from that, you had some other prominent Nifty winners like HDFC that was up about 2.5%. That stock is up 8% now this month. Reliance is up about 1.5% and Lever was up about 1%. On to the banking space then. HDFC Bank, State Bank of India, Yes Bank, these were just some of the gainers that we saw. The entire space actually was buzzing in trade today. On the losing side, Bajaj Auto, which declares numbers tomorrow, that stock was actually a bit soft today, down 2%. K in India, because crude has again corrected from the highs, that stock was down 2%. And Tata Steel ahead of its earnings was down about 2%. Now on to the mid-caps. And, well, big reaction in some individual names today. Century Textiles was up 6%, United Breweries was up 4%, Man Infra was up about 6%. On the losing side, we had some earnings reactions like Bharat Forge. That stock was down about 4%, Punj Lloyd was down 4%, and Pidilite was down about 4%. So, really, the big call for the market now is that can it continue to build some more momentum and make a dash towards 8,500? And will the large caps now again play catch-up to the kind of outperformance that we have seen in the mid-cap? Something that we have seen today, will that continue over the next 2 or 3 days?
All right, thanks Anuj for that. Well, on that note, let's bring out our first market voice of the day. Gautam Trivedi, the MD and CEO of Religare Capital Markets, expects the slowdown in the cement sector to continue, but he sees a demand pickup in the four-wheeler space. He also gave us key takeaways from the recent road trip that Religare had in rural India, specifically in Maharashtra and Gujarat. Take a look.
We've seen a significant slowdown in cement. Now, of course, cement is not so much by the rural slowdown. It's more, as cement dealers told us, that they're seeing a drop in consumption by as much as 25 to 30%. And this is in both the states, led by the fact that there are virtually no infrastructure projects that are actually operating at this point. So that's one. And secondly, there is a real a slowdown in the real estate space, which seems to be an all-India phenomenon. All the two-wheeler dealers that we met on both these trips are struggling. Bajaj, whether it's Bajaj or Hero. The one segment that seems to be still doing well is the scooter segment. Bajaj is obviously not present in the scooter segment, but that segment seems to be doing a lot better than the average motorbike. We went to the showrooms to meet the dealers, and the showrooms were packed with customers. Businesses doing, for example, the Maruti dealer in Mehsana is having one of his best years. He's selling as many as 500 Marutis a month versus about 300 about 6 months ago. So that's obviously a huge pickup, and Dzire by far remains the top selling model.
All right, moving on to some stock-specific action after its mega billion-dollar buyout of JP Group's Madhya Pradesh plant. Sources say Birla Group's Ultratech now has its eyes on JP Group's plant in Bhilai, Chhattisgarh. But that is just the tip of the iceberg. The sale is the beginning of JP Group's larger plan to sell its cement business bit by bit to soothe its nerves from the 60,000 crore rupee debt. Kritika Saxena is standing by with the details. Kritika, first tell us about the Bhilai plant.
So the plant has a capacity of around 2.2 million tons per annum. Let's understand the valuation for this. Currently, I understand that Ultratech and JP Group are discussing a valuation of 2,200 crore rupees, actually between 2,100 to 2,200 crore rupees. This is inclusive of a debt of 550 to 560 crore rupees. So if you remove that debt component, the overall equity value comes up to be around 1,600 to 1,700 crore rupees. Now, even at that value, it's significantly higher than what market experts are expecting the Bhilai plant to garner in terms of valuation. What I understand is that the plant also has clinker capacity, which is an attractive bet for a company like Ultratech, and possibly that's the reason why JP Group has the confidence to quote a higher valuation. In terms of where the discussions have reached, I understand that they are in the final stages of negotiation. Ultratech is the front runner to acquire this, and possibly by June we should have some clarity on when the term sheet will be signed. Now, as you said, this is just the tip of the iceberg. I understand that after the sale of the Bhilai plant is completed, JP Group is likely to sell some of its cement businesses, or rather majority of its cement business, bit by bit, or rather in a piecemeal basis. So they're looking at their other plants in Madhya Pradesh, in Chhattisgarh, in Gujarat, in Andhra Pradesh as well, to gradually look at selling off a couple of their plants in order to be able to bring down that 60,000 crore rupees debt.
Thanks, Kritika, for running us through that. Shifting focus now to the earnings action today. Bharat Forge reported numbers for the fourth quarter of FY15. Earnings were strong, but market expectations were higher. Sonia, how did you read the numbers?
Oh yes, as you rightly pointed out, the earnings were very strong for the company. So it was a 30% growth that we saw in revenues. It was a 70% growth that we saw in the profits for the company. But the key problem is the commentary that the management made to its investors and stakeholders, where they did mention that the Q1 FY16, that is this quarter demand, will be slightly muted compared to the previous quarter. So they expect more weakness in store. They say that the recovery in the medium and heavy commercial vehicle sector has been slower than anticipated, and that's the key concern. But apart from that, the industrial sector is also witnessing mixed fortunes due to a sudden slowdown in the oil and gas markets. So because of that, the oil and gas sector is also doing poorly, and the mining sector continues to be sluggish. So it is this poor outlook of the company that spooked the stock today, and that's why the stock was down about 4% odd. But other than that, the numbers look quite solid. It's just that the growth rate is not as scorching as what we've seen in the past. So it's slightly lower than street expectations. But internals are good. Shipment tonnage has gone up by 18%, domestic revenues are up by 15%, and export revenues have gone up by almost about 45% odd or so.
Okay, thanks for running us through that. Moving on to DLF then, that has put its multiplex business DD Cinemas on the block yet again, with the company now looking at a valuation of 480 to 500 crore rupees for the entire business. Nayantar Rai, who broke this story earlier, joins us with more details. Nayantar, give us the breakdown.
Thanks a lot for that, ladies. What I understand is that DLF has, for the second time round, put DT Cinemas on the block. It has in fact engaged and given the mandate to EY for the same. I understand 3 parties right now are talking to DLF to buy out DT Cinemas, with PVR Cinemas being extremely serious. However, I do understand that while DLF is looking at a valuation of 480 to 500 crore rupees, the expectation is that deal closure, if it does take place this time round, could be in the range of about 450 crore rupees. I also understand an international player which wanted to foray into India in the multiplex business has already walked away from talks, citing high valuations. 500 crore rupees, 450 crore rupees, it's going to be a drop in the ocean when you look at DLF's massive debt. For that, the company perhaps is going to have to look at listing REITs and bring it to more manageable levels. With that, is back to you.
All right, Nayantara, thanks for that. Now let's turn our attention to the global arena. Volatility has been ruling the roost, not just in India but across the world. We spoke to Shane Oliver, Head Investment Strategy and Chief Economist at AMP Capital Investors, and he says that despite the global volatility, the broad outlook remains positive. Take a look.
A lot of that volatility arose because of the backup in bond yields that we saw, particularly in Europe, and that flowed through globally. And of course, as bond yields backed up, it put pressure on share markets to some degree. So I think that was the basic cause of what was going on there. I think the broad outlook for share markets remains fine. If you allow for still relatively low bond yields, very easy monetary conditions globally, the fact that the global economy is still growing, albeit a bit too slowly, all of those things are normally quite positive for share markets. So I think the broad trend is likely to remain up, despite the volatility we've just seen. I think even in India, despite the relatively rich valuations, it's still reasonably attractive compared to markets like Brazil, for example, or much of South America, where the commodity price downturn is still impacting, and of course economic reform is still sort of a distant pipe dream. So broad outlook, I think, for Indian shares is fine, even though the start of the year has been a bit more constrained.
Okay, on that note, it's time for a short break. But coming up on the other side, Sudarshan Sukhani will join in for a technical chat, and we'll also tell you about the other stocks that were in the news.